2.5 minutes and counting, guys. 2.5 minutes and counting. All right, good morning, Checkmate crew. It's 30 minutes after the opening bell of New York Stock Exchange at 10 a.m. Eastern Time on this beautiful Tuesday, February 7th, 2023. It's yours truly, Mickey Blindside here with your market memo. Okay, so today, I guess the news of the day is that Papa Powell, Jerome Powell, who's our Federal Reserve Chairman, he is going to make a speech, I think around noon Eastern Time today. I think that's what it is. No matter. As you guys know, I do not follow anything he really says because I think it's pointless. What's most important is the bond market reaction to it, okay? That's the most important thing for us. So let's jump right in. Let's talk about the two charts of the day. I usually like to keep it to one chart of the day, if I even have one, that is. But today I want to show you two charts that I think are going to be the most important, probably for the near-time future, okay? First, let's talk TNX, 10-year Treasury yield, okay? We're seeing it go up, okay? Now, when the 10-year Treasury spikes up like this, all right, the 10-year Treasury yield, when it spikes up, it can compress valuations and lower the institutional bid. Institutions use the 10-year Treasury as their quote-unquote risk-free interest rate when they value cash-producing assets, all right? And so when, it's called the discounted cash flow model. A lot of you have probably heard of it before. If you took a corporate finance course in college, you probably modeled a few DCF valuations yourself. So for most institutions, they use the TNX. And when the 10-year Treasury yield spikes up, the value of that certain cash flow goes down, okay? And so if we start seeing this really rise and just keep going up, we could see a dash for cash. Speaking of dash for cash, remember in the summertime when I talked about dash for cash, what's the chart that I always showed you guys? That's right. If you're saying the 5-year Treasury bond futures, then you're exactly correct. This is the second chart of the day, the TNX and ZF. Now, ZF is the 5-year Treasury note futures. So, ZF tracks more the price of the bond for the 5-year Treasury bond, whereas TNX tracks the yield, okay? Yield and price of bonds are inverse one another. If yield goes up, prices of the bonds come down, and vice versa. Okay, so right now ZF shows us the pricing of shorter term bonds. It's a it's just what I use for that. It's a futures contract. It's widely traded. Of course, not as widely traded as the 10-year Treasury bond, but still very widely traded, and it's the proxy for short-term interest rates. And so we've seen big declines in the last 2 sessions, and if this keeps going further down and actually makes a lower low on a daily chart trend, I can definitely see a case for a dash of cash, at least on a temporary basis. Okay, it probably is not going to be as big as the summertime, as the summer 2022, but we could see the dollar go up, and we've already have. So in those sessions where ZF had those big drawdowns, we're seeing the dollar go up. Okay, I still have those UUP hedges. Let me see here so that you guys know. See, there you go. See, I still have them. Okay, still a little bit underwater on them, but I think if the dollar goes up, we could have a very good chance of cashing out of these hedges. And again, this is a very small position. I have it, to hedge for my quad U shares, which is, uranium mining, which is also very, it can be very temperamental based on dollar moves. And so to hedge that, I was in the UUP calls, which are, UUP is just a ETF that tracks the dollar index. But, we could see the dollar go up. And again, the 2 charts of the day, TNX, okay, when Papa Powell talks, keep an eye on TNX, and then keep an eye on the ZF futures. All right, that's really the 2 charts of the day. Now, those are the 2 main charts you want to be looking at. If you want to look at a third chart, you could also take a look at CEW. Now, CEW is not that liquid of an ETF. However, it's I use CEW more for closing prices at the end of day, just because at the end of day, usually there's at least like a quote or something that they put. Sometimes this ETF doesn't trade at all in a day. Okay, but it's a collection of all the emerging market currencies. It's a strategy that aggregates all of that. I think they aggregate it through the use of derivatives and things like that. But this is a very good, on a closing basis, that is. It's a pretty good indicator of what is going on in emerging market currencies. And right now, we are also seeing that drop down as well, too. I think if it keeps dropping down, if this keeps dropping down like this, again, that's going to be supporting of the dollar. It just means that some of these emerging markets are buying dollars, at a faster rate. We talked about this since last year. There is a big service payment due on a lot of emerging market bonds later on this year. Not only that, we're starting to see other emerging markets form cracks in their economy. Pakistan is on the news right now. They're going through rolling blackouts right now, food shortages, all types of problems right now happening. We've been talking about, Sri Lanka last year. We talked about, some of these other countries that were already forming cracks. China was about to crack until, the People's Bank of China released all that liquidity into the market to save their real estate sector. How long that sugar rush lasts, who knows, right? But, I think these are all, the currencies and bond markets are really forward-looking indicators for risk assets. And so I think it's very important that we take a look at that. So again, 2 charts of the day, TNX and the ZF futures. If you've got space for a third chart, CEW, but again, that's more the end of day kind of a thing. Let's take a look at some of the other currencies. Actually, what I wanted to take a look at was also the Japanese yen. We're also seeing the Japanese yen or the USDJPY chart go up as well too, which means that the Japanese yen is coming down in relation to US dollars. So if this goes up, it means we need more yen per dollar. It means the yen is depreciating against the dollar. Okay, so if right now we're seeing that as there's dollar strength, the Japanese yen is weakening. So I think if this keeps going up like this, we could see actually precious metals come down too, which we'll cover in a second. The British pound. The British pound also is scaling back just a bit. Are we going to see that lower low? I don't know. I don't know if we're going to see that or not. If we do, that's going to be very interesting. If the British pound makes a lower low, as well as the Euro USD, same thing, starts making a lower low, we could see that ZF really, come down as well too, and then we might see the dollar go up. So these are all forward-looking indicators that I'm looking at for the dollar and also for risk assets. Speaking of which, I also made some changes to my portfolio. I got rid of my HUT shares. I know, guys, HUT. Luckily, we were able to get a buy at that 85-cent zone. Remember, I've been buying this throughout 2022 and just averaging down and selling premium on this. Our final buy was at 85 cents a share, and I sold it for $2.29. If you guys look back in the Discord, and again, guys, follow the Discord. The invitation link is in the video description below. No trade fees. There's no sub fees. There's no paywalls or anything like that. It's free, and that's where I usually send out all my alerts live. And so for those of you who are Discord members, you saw my live alerts. I sold at $2.29 last week. My average came out to be around $2.20, so like 9 cents per share, which is basically nothing. It's break even for almost like a 1 year hold. I did not want to see my position go from green to red again, so I managed some risk and I took the position out. So right now I have no direct Bitcoin exposure. So I just wanted to share that with you guys. That doesn't mean it can't go up. If it does go up, it's going to go up without me. But I think there's other plays that we can do. And also, too, if we see a little bit of volatility, I think there might be even a better opportunity for me to get in. If HUT comes back down to let's say around 130 or so, 125, 130 zone, I might actually get back in. Okay, I might get back in on this. But for now, I'm out. All right, so I just wanted to share that with you guys. Speaking of which, today we'll start with crypto. Let's actually start with crypto today. So here is what's going on in crypto. What is this? This is Bitcoin. This is Bitcoin's notional value, open interest on the options market. It's at $6 billion. So we're seeing that 6 to 6.5 billion, and it just keeps teetering back and forth. In ETH, actually, ETH's open interest, I believe, is rising. Let's take a look. Well, it's flattening out now, but okay, so it's now around $5 billion. So 6 and 5, still not that big, but at least it's holding its open interest. Let's take a look at some block trades. I didn't notice any Bitcoin block trades. Right before, I just checked right before I started the market memo. Let's take a look. If there's any block trades. I didn't see any big block trades for Bitcoin. Oh, okay, so there's a few. There's a few. What is this? But they're very small. They're pretty small. Looks like this is a spread. Somebody sold 3,000 calls and bought the March 25,000 calls. That's an interesting. This might be a closing order, actually. This might be a closing order. Because that's very odd. Why would you sell longer term I mean, usually when you open a position, they usually sell the shorter dated premium to pay for longer dated premium. But this is the opposite, which means that maybe this is a closing order. It could be a closing order. Let's actually take a look at. Wait, is this? Yeah, this is Ethereum. So let's actually take a look at Bitcoin again. I wonder if calls sold. Okay, so I mean, more calls were sold than bought. That doesn't mean that, yeah, calls sold. So that doesn't necessarily mean that that has to be a closing order, you know, this one that we're talking about right here. But I mean, I think it's a pretty, you know, especially, I mean, if it was like, I don't know, if it was like a $1,000 or $10,000 order, maybe, but this is starting to get into six figures. I highly doubt somebody's going to do spread like this as an opening trade. I think this is more of a closing trade than anything else. So I think we're starting to see some calls getting sold, which is fine. Wow, look at that forward skew. Look at that. Look at that forward skew. So maybe there's some maybe some retail is buying some short-term calls and chasing some calls. It could be. I mean, you know, generally, you know, the crowd isn't always wrong, but when they are wrong, usually it's because of a reversal. That's usually when the crowd is wrong. Usually the crowd is right when they go with the trend, but when they do get it wrong, it's usually because of a reversal. Okay, so that would be interesting if we see Bitcoin and everything come down and everybody's chasing those calls, retail's chasing those short-term calls. That'd be interesting. Devol, the volatility is still quite low, so we'll see what happens. Actually, what is the devol on Ethereum? I know we got some. It's a little bit higher. There we go. So I know that right now there's a lot of chatter about that Shanghai upgrade, where you can now withdraw the state Ethereum. We'll see what happens. I don't know if there's some growing interest and options positioning because of that, but we haven't seen anything, at least in the open interest yet. So that's going to be interesting to monitor. As far as we haven't taken a look at the Ethereum chart in a while. So actually, let's take a look at that Ethereum chart. Again, my plans really haven't changed at all. I'm still waiting for the ETH gold ratio, which, I mean, it's still kind of far away. I mean, we'll see. If we get a little bit of volatility, I mean, we could get there. And right now, already, the ETH gold ratio, that upward trend line, is now at like 0.62. Remember, we were talking about it when it was at 0.58, 0.57. Now it's at 0.62. So if we get to 0.62 or so, we get to that line, I'm definitely buying some Ethereum. And that will be a sizable position when I get there. That is where I'm really looking for. Okay. Patience is key. Okay. Patience is key. All right. Enough of crypto. Next, let's get to, you know, energy. I know a lot of people are talking about energy right now. You know, energy is going all over the place. Let's take a look at oil. A lot of people, once it got to the 80s, a lot of people were calling for 90s and 100s. I was like, yeah, well, that might take some time. Lo and behold, look at that, right? So, you know, usually commodities, there's a seasonal pattern to things. It doesn't always have to follow that, of course not, you know, but minus any like big news event or something like that, minus any catalyst, you know, it usually is the case where, you know, that during these like off seasons, you might see more of a back and forth chop action happening in energies or in commodities just in general. I do think though, once we get to closer to planting season, and again, guys, I've been telling you this since fall, okay, 2022. Patience, okay, patience. You don't have to chase after every quote unquote opportunity that's in front of you. Usually, people who think like that are usually people who think opportunities are scarce. And that kind of mindset is the mindset of poor people, okay? The wealthy mindset is that opportunities are abundant, so I'm going to be patient and pick the best opportunities, okay? Not only is financial capital a finite resource, but your mental capital is also finite as well, okay? Nobody has infinite money and nobody has infinite, mindset or infinite space in their head to worry about an infinite amount of things. So so that's why it's best to be patient and disciplined. Okay, the wealthy mindset. All right, the mindset of abundance. All right, so we really want to make sure that whatever opportunity that we participate in is the best opportunity where the reward to risk is really in our favor. Okay. And right now, I don't think it's the season for that. I think as we get closer to planting season, we'll probably start seeing the beginnings of the next commodity cycle. All right. So no trade for me here. And again, if it gets to like, I wouldn't do any direct long unless we're at around the $60 to $63 zone. If by any chance oil can get there before planting season, that would be my level to start getting long. And I'll probably be using call spreads on the futures contract itself to do that. All right. Next, nat gas. Okay, I'm super bullish on nat gas. I think nat gas is going to be like the trade of it could potentially be the trade of the year, but I think it's going to happen later on. Okay, I think this is going to happen later on. All right, I would love to see this consolidate for a bit and actually even head a little bit lower. Okay, I wouldn't mind this heading a little bit lower. You guys already know my thesis on this. I've had it in the videos past. I'll put a link right here if you're joining us on YouTube on the recording. If you hit that top right link on the exclamation point, I'll put a link to my thesis on fertilizers and how that could affect natural gas. But I actually think that we might see a fertilizer shortage of potash, the potassium ash fertilizers. We might see a shortage of that after harvest season. So that's after around that August, September area, around August or so, after August, we might be seeing a fertilizer shortage. And so that means a lot of farmers may have to switch their fertilizers from the potash fertilizer to natural gas based, urea based fertilizers. And if that's the case, we could see natural gas really go up, not only because of the fertilizer industry, but also because of the next cold season, and kind of a confluence of those effects might see a bid on natural gas. You know what my play is? MOS. All right. I talked about this then before. And again, I shared my MOS play with some of you guys. I mean, I shared it with everybody, but we've been talking about it a lot in Discord last week, and I know some of you guys jumped the gun and got in. I mean, again, patience and discipline. Why chase this? Why chase this? Don't chase, and I get it. Like, you don't want to miss out, and that fear of missing out again comes from that idea of opportunity scarcity. All right. And again, I want to be in the mindset of wealth and abundance. There's an abundance of opportunities. We want to really pick our best ones. I really think that until planting season, we might see MOS come down. And I'm willing to leg into some leaps after we get down a little bit. And again, I'm looking for some better buys here. So if we're able to get to like around that 40, let's say, what is this? Around that 46 to 47 zone. That would be a great opportunity for me to leg into some longer dated leaps. And if you actually look at the options chain is pretty good on Mosaic. I'm looking at those January 2025s. We almost got 2 years on those. I'm going into some higher delta leaps, probably somewhere around the 60, 70 delta zone. That's where I really want to be getting involved. And then I'm going to be selling poor man's covered calls against it. I think this is going to be a great opportunity. But again, patience. I'm not sure if this is going to be something that we do during harvest season or if we're going to be doing this closer to planting season. Planting season is around like March, April, and then harvest season would be around that August area. So depending on where we get the best opportunities. Again, if we start seeing this going down to 46, 47, it consolidates there. That, you know, that would be a good place to buy. So I'm looking out for this. All right. Speaking of which, we actually talked about the dollar going up. Dollar going up means, guess what? Precious metals coming down, and you know I've been trying to get in on precious metals for a bit on the metal miners. If we see if we see a little bit of a dash for cash scenario, I mean, we could see gold coming down. That would be awesome. If gold came down, silver came down, I would love to get a crack at some of those metal miners. Yeah, silver and gold coming. Well, silver's coming down, gold not so much. But I think out of the two, usually gold. Gold makes the more definitive moves, whereas silver is kind of like the lie detector for gold. That's in my experience. That's how I use it. I'm still trying to get in. You know the names I'm trying to get in. SILJ, which is the junior silver miners. I'd love to get in. If it gets to like 10 or lower, I'm getting in. Okay, I'm definitely getting in on SILJ for that. GDX, which is the gold miner ETF. This is like the more liquid, like more senior metal miners. For those of you who think SILJ is a little bit too exotic, and I get it. For some of you, SILJ may be a little too risky, a little too exotic, a little too leveraged, a little too much beta for you guys. So you guys may want to stick with GDX. GDX also is a fine ETF, very good options market. There's nothing wrong with that. Just me, you know, when I'm gonna play a metals like that with the position sizing that I want a little bit more leverage. So that's why I'm gonna go with SILJ. But you know, to each their own. I think at the SILJ, I think it'd be a very good long to get involved right here around this 28.50 to 29 zone. That would be a great zone to get in on GDX. Also, if you guys want to be more involved in an individual gold name, Barrick Gold. I mean, that is the big daddy of them all. That would be also a very fine choice as well too. If that gets to around $17, I think that would be a great opportunity. And again, all three have very good options markets. All of them have those January 2025 leaps. That's what I'm going to be doing. Again, high delta in the money, leap calls, selling poor man's covered calls against them. That is what I'm going to do. Okay. And I've went over that before too. Any questions, comments, rude remarks, anything you guys want to see? Anything you guys want to see? So yeah, again, chart of the day, guys. TNX. All right. TNX. Ooh, look at that. Okay, TNX. That's interesting. And ZF. Okay. Two charts of the day. All right. And this, I think, is going to be these two. TNX and ZF are going to be forward indicators for risk assets as well as a dollar. Okay. So those are the most important things to look at. Any questions, comments, rude remarks, put it in the Discord, put it in the chat on YouTube, or if you're joining us on Twitch, put it in chat. If you're joining us from Facebook, I don't think you can reach me if you're joining us from Facebook, actually. All right. In that case, I don't see any questions. We'll wrap this up then. You know, and so that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the video description below. Come join our Discord. Be a part of our growing community. No sub fees, no paywalls. Of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'm going to be back tomorrow and Thursday, 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time. I'll see you guys then. Trade safe.